Building credit in the US can seem particularly daunting for beginners and new immigrants who are just starting out, but it's an absolutely crucial step towards achieving long-term financial stability and independence in your new home. Your creditworthiness, which is determined by your credit report and score, significantly impacts major life decisions like your ability to rent an apartment, buy a car, or secure important loans for your future. The widely used FICO score ranges from a low of 300 to a high of 850, serving as a key indicator of your credit health, where scores between 670 and 739 are generally considered good by lenders. The key factors that influence your FICO score are led by payment history at a substantial 35%, followed closely by amounts owed at 30%, and length of credit history contributing 15% to your overall score. Rounding out the factors, new credit accounts for 10% of your score, while credit mix, the variety of credit types you manage, like cards and loans, makes up the remaining 10%. The solid foundation for building strong credit lies in responsible usage practices. Always make sure to pay your bills on time, without fail, every single time, to establish reliability. In addition, strive to keep your credit card balances low, ideally maintaining utilization below 30% of your available credit, and be cautious by avoiding applications for unnecessary new credit that could harm your score. For immigrants new to the US, obtaining either a Social Security number or an individual taxpayer identification number is often a necessary first requirement to successfully apply for any form of credit. Thankfully, opening a US bank account is usually straightforward with proper identification documents like a passport, serving as a crucial first step towards integrating into the financial system. Helpful services such as Nova Credit can bridge the gap by allowing you to leverage your existing foreign credit history, making it easier to qualify for US credit applications right away. As a beginner, you can effectively start building credit using secured credit cards, which require you to make a security deposit up front that then serves as your available credit limit. Another reliable option is a credit builder loan, where the amount you borrow is securely held in a savings account on your behalf until you successfully pay off the loan through installments. You can also accelerate the process by becoming an authorized user on the credit card of a trusted family member or friend with an established positive credit history, allowing their good habits to boost yours. To speed up your credit building efforts significantly, commit to making frequent payments throughout the month, which helps keep your credit utilization ratio consistently low and shows lenders your proactive management. If you're facing temporary financial difficulties, don't hesitate to proactively negotiate with your creditors, as they often offer flexible payment arrangements or hardship programs to help you stay current. Make it a habit to regularly review and dispute any inaccuracies or errors you spot on your credit report, since even small mistakes can unfairly drag down your score and cost you opportunities. A smart strategy is to utilize rent reporting services like those from certain apps, which convert your consistent on-time rent payments into positive entries on your US credit history. One of the most common pitfalls to steadfastly avoid is maxing out your credit cards, as high balances signal to lenders that you're a high-risk borrower who may struggle with repayments. Missing even a single payment is among the most damaging actions you can take against your credit score, so always prioritize paying at least the minimum on time to protect your progress. Be wary of applying for too much new credit all at once, as this triggers multiple hard inquiries on your report that can temporarily lower your score and raise red flags with lenders. Never make the mistake of ignoring your credit report. Instead, regularly monitor it through free annual reports or services to quickly catch errors, track progress, and maintain full awareness of your financial standing. Closing old credit accounts, particularly those with a long positive history, can unfortunately shorten your average age of accounts and negatively affect 15% of your FICO score. Avoid the trap of carrying balances from month to month on your credit cards, as this racks up costly interest charges that make your debt grow larger and much harder to pay off over time. To stay on top of your credit health, always monitor your credit report and score regularly using free tools from annualcreditreport.com or apps, keeping you informed and proactive. Keep in mind that building good credit is a journey that requires time and consistent patience. But with steady effort, you'll steadily achieve your bigger financial goals like homeownership or business startup. If you ever feel overwhelmed by credit challenges, don't hesitate to seek professional guidance from a certified nonprofit credit counselor who can offer personalized strategies. Armed with these proven strategies and tips, you're now well equipped to build a strong, solid credit foundation in the U.S., unlocking a world of new financial opportunities ahead.